Hello, investors, and welcome back to FinBot Insights. Today, we're diving deep into Goldman Sachs' 2025 Equity Market Outlook, aptly titled The Year of the Alphabet. This report, fresh off the press, paints an interesting picture, so let's break it down. Goldman Sachs argues that while 2024 saw a phenomenal equity rally, one of the strongest since 1928, we're now entering a more nuanced phase. They predict a 10% total return in US dollars for equities through the end of 2025. Sounds promising, right? Well, there's more to it. A key takeaway is the current high valuation of equities, leaving little room for further expansion. This means future returns will be heavily reliant on earnings growth, not just rising valuations. Goldman Sachs believes earnings will grow, but at a slower pace than consensus estimates. They're essentially saying the easy money has been made. Half of the 2024 equity returns came from valuation expansion fueled by optimism around lower interest rates. However, longer-term rates have been sticky, creating a disconnect between typical bond yield and PE ratios. This suggests the equity risk premium has shrunk, implying investors are banking on strong future growth. The report highlights the unusual market concentration, with the U.S. representing 70% of the MSCI AC World Index, and the top 10 U.S. stocks making up over 20% of the global index. While these mega-cap tech companies have justified their performance with strong profit growth, Goldman Sachs advises diversification to enhance risk-adjusted returns. So, what's their strategy? Goldman Sachs recommends a more eclectic approach, focusing on 4 key themes. Market broadening. Look beyond the mega caps. With interest rates potentially falling, opportunities should emerge in a wider range of companies. Selective value. While growth remains expensive, there are pockets of value where companies are increasing shareholder returns. Geographical diversification. The U.S. market has seen significant outperformance. Consider diversifying into other regions like Japan, the UK, emerging markets, and even China, where valuations are more attractive. Enhanced capital market activity. Goldman Sachs anticipates increased M&A activity, presenting opportunities to invest in potential acquisition targets. The report acknowledges risks, including the possibility that recent optimism has front-loaded returns, leaving markets vulnerable to corrections. Also, the high market concentration poses inherent risks. In conclusion, Goldman Sachs's outlook for 2025 is cautiously optimistic. They predict moderate returns driven by earnings growth, emphasizing the importance of diversification and alpha generation in a high valuation environment. The era of simply riding the beta wave is over. It's time to be more selective and strategic. That's all for today's FinBot Insights. Don't forget to like and subscribe for more in-depth market analysis. And as always, do your own research and consult with a financial advisor before making any investment decisions. Until next time, happy investing.